So I'd like to just introduce our first speaker, and that's Fergus Kiley. A little bit of background about Fergus. He's the General Manager of Operations for NiCo Resources. By way of background, Mr. Kiley is a cross-disciplinary skilled extractive industry professional. Isn't that a mouthful? With a foundation grounded in geosciences, Fergus commenced his career as an exploration and production geologist with Newmont before transitioning to the various small and mid-tier exploration and production companies. In more recent years, he's leveraged his operational experience and capital markets exposure to join one of Australia's largest natural resource private investment group, Wyloo Metals, and that's a company within the Tattarang Group. As a senior geologist for business development, he also holds a Bachelor of Science honours in geology from the University of Adelaide. Welcome, Fergus, to the podium.
All right. Good afternoon, ladies and gentlemen. Thank you very much, David, for the exemplary introduction there. Okay, I'm here to talk to you today about NiCo Resources. NiCo Resources is a new entrant into the market, and in fact, this is our first presentation on West Australian soil. Before I kick off today, I just want to run an acknowledgement to country. NiCo Resources acknowledges the traditional custodians of the lands on which we operate, which is the Pitjantjatjara, Nutjinjara and NiCo people. We recognise their cultural heritage, their connection to land and water. We pay respects to their elders, past, present and emerging. All right, here we go, guys. This is it. This is the key slide. What is WINGELLINA? WINGELLINA is the largest undeveloped nickel reserve in Australia, and it is the third largest undeveloped reserve on a global basis. We have 2 million tonnes of contained metal and 154,000 tonnes of cobalt. The project is recognised as an Australian critical minerals project. We have our approvals in place from the EPA. We also have a mining agreement in place with the traditional owners. That is incredibly important as we have a strong and continuously fostering relationship with our traditional owners, and we maintain that moving forward. Mining for this operation is extremely low cost. It would be a proposed free dig operation with a very low strip ratio, 0.5 to 1 for the first 20 years and 1 to 1 for the life of mine of the operation. That is because this ore body outcrops at surface. The metallurgy is perfect for high pressure acid leaching. Our 200 million tonne resource and 168 million tonne reserve, which is a 97% conversion for those playing at home. The majority of that is limonite ore. That is high iron, low magnesium. We have very little saprolitic ore that makes it into our resource and reserve statements. That means this ore is perfectly suited for high pressure acid leaching and production of midstream products for the energy and stainless steel markets. We have life of mine power and water resources out on site. We also have life of mine calcrete resources. All of these are the correct ingredients for developing a project that has, on a relative basis for our location, alleviates some of the logistics input costs. And of course, we have a very large resource endowment, which we continue to grow moving forward with active exploration. Okay, so what I thought it would be good for you guys today, I want to provide some value for the crowd here. Now, I'm not going to dwell on the fact that the world needs excess nickel, needs lots of cobalt, etc., etc. You guys have already been inundated with that material. But what I would like to highlight here is by May 2022, there were 304 gigafactories that had been proposed, permitted, constructed, or in commencement. If you back solve the average gigawatt hour input for those factories, on the right hand side in that table, that shows you the annualised raw material input for 1 gigafactory at 30 gigawatt hours. Take note of the 19,000 tonnes of nickel on an annualised basis. We'll come back to that. But I thought I'd provide this number for you so that you guys who are walking around the conference floor looking at all these amazing Australian projects can have in your mind, how much nickel is required to run one of these gigafactories. So there you go, 30 gigawatt hours on an average of NCM chemistry is 19,000 tonnes of nickel. So if you take that 304 factories, it equates to 3.4 terawatt hours, which is the 2030 projection on the right. If you apply a 50% market share for lithium iron phosphate, which is the other dominant chemistry, so chemistry that doesn't involve nickel at all. So nickel chemistries only account for 50% of the market by 2030. You still need an annualised increase of 1.08 million tonnes of nickel on what is a 2.5 million tonne market today. That's a 40% increase on where we sit today. This is the global nickel market at a snapshot in time. This is what the universe looks like. This shows the key production countries around the world and also highlights the reserves and resources that each of the countries has. Also, underneath each of the boxes, you'll see an orange or a grey bar. That denotes the amount of production ore source. Grey is sulfide, orange is laterite. I'd like to highlight, if you have a look around Indonesia, Australia and Brazil, speaking of reserves, which are the only near-term resources that will be able to come online to feed this demand, the only other countries outside of Indonesia, there are no other countries, sorry, outside of Indonesia, Australia and Brazil that have high reserve levels. There are high resource levels around the world, but very low reserve levels. Bear that in mind as we go forward. So that then zeroes in on Australia as an investment jurisdiction. And you can see this graph here just denotes the largest undeveloped reserves of nickel globally. Obviously, the Central Musgraves project, which is ours, is in pink. You can see the blue denotes North American and Australian assets, and the grey is the rest of the world. By way of contrast, you might also appreciate about halfway along, there's a project called the West Musgraves, a project that recently received FID for $2 billion in our neighbourhood. That resource needs to be updated, but it's just over 1,000 tonnes of 1 million tonnes of contained metal, as it's almost double that, just by way of contrast. So then if you break down the laterite resources in Australia and how they look, this graph shows you a reserves and resources comparison. You can see the assets that are in production are the likes of Murrin in the black and Ravensthorpe in the dark grey. Our project sits in the middle there. We have a very high reserve to resource conversion, 97%, as I explained previously. That sets us in good stead to backstop a proposed mining operation. So what is our project and where is it? So the map on the right shows you where our project is located. The WINGELLINA asset is our crown jewel within the company. That is the 200 million tonne resource and 168 million tonne reserve. A couple of points on this map that aren't highlighted in the dot points are, if you look just to the west of us, there's a kink in the road. Approximately 140 kilometres due west of us is a project called the West Musgraves. That has just been green lighted for a $1.7 billion capex development by a mining company with a two-letter acronym. The other thing that I'd like to highlight in our jurisdiction is that this red line is the Great Central Highway that exists from Leonora-Laverton all the way up to south of Uluru. The government's committed $867 million to pave that, and that exercise is being undertaken as we speak. So there's $1.7 to $2 billion of capex at the West Musgraves and $867 million of infrastructure, capital cost infrastructure projects that are occurring on our doorstep. The WINGELLINA project and some of its characteristics. I touched on earlier that it's got an exceptionally low strip ratio. This ore body outcrops at surface. The average ore thickness is approximately 80 metres. We have very low magnesium levels and high iron levels, which make it perfectly suited for high pressure acid leaching. And the operation, as I said, is free dig from surface in the ore zones. It has an SG of 1.1, which is exceptionally light. So the last time that this project saw significant work, it was in the stable of another company called Metals X. They completed a pre-feasibility study on it in 2008. These are some of the key metrics that were presented. Some of the things I'd like to touch on are the project has a 42-year life of mine based on the reserves alone. It has an annual throughput of 4.16 million tonnes for a production of 40,000 tonnes of nickel and 3,000 tonnes of cobalt in an MHP product. That MHP product is approximately 180,000 tonnes of net volume out. A little study that I did on the right-hand side here, and this is how I think about assets around the world. There are 475 late-stage development or primary producing nickel mines in the world. If you remember back to the nickel universe, what I would classify as investable jurisdictions around the world would be North America and Australia. So there are 160 of those pre-production assets. Of those 160, only 31 of them have reached some sort of study phase, that be PEA or scoping level and above. Of those 31 projects, only 4 have received EPA approval and have some sort of agreement in place with the Indigenous owners on the lands in which they operate. And then if you want a contained metal inventory of greater than 2 million tonnes, there is only one project in the world that exists that meets that criteria, and that is our project. We have significant exploration upside. One of the interesting things with this project is that it is a true belt scale opportunity. We command close to 100 kilometres of what they call the Giles Complex. The Giles Complex is the prospective terrain for these styles of mineralisation. Interestingly enough as well, the Giles Complex is also the host complex for magmatic intrusive nickel deposits like West Musgraves just down the road. We have exceptional upside with less than 25% of our mineralised corridor being exposed to any sort of exploration in the past. And as we ramp up our studies and development stage going forward, we'll be increasing our exploration exposure to this prolific belt, which is now opening up. 2022, the end of 2022 sees some key deliverables for NiCo Resources. We're currently undertaking a 10,000 metre drill program. That 10,000 metre drill program is delineating some high-grade resource to reserve conversion, which will backstop our definitive feasibility study moving into the new year. That's a low-hanging fruit for the company because that adds incrementally some of the highest grade tonnes in the project from the resource into reserve. That is highly NPV accretive from a valuation perspective. We will also define the Lewis Cowcrete resources. As I said, that we have life of mine Cowcrete resources at the project area. Cowcrete is used as in the circuit for neutralising pH. Having the ability to source that locally reduces the pressure on importing slacked lime to the project. And of course, we have the Man-Fault Paleochannel Water Delineation Project. We can delineate water resources within 7 kilometres of the proposed development site, which means that we can push out the capital costs of developing the bore fields that are located further away from the project until, say, years 2 of construction. We'll also look to complete our pre-feasibility study. We had an announcement this morning on the progress of where that's at. We will look to complete that study by year's end. Then we'll also design and deliver a renewable power feasibility study to dovetail into what will be our definitive feasibility study. It's important to note that a project just down the road from us has a proposal for an 80% hybrid renewable power solution. It's advantageous from a cost perspective and from an environmental perspective for us. And of course, the final one is we'll design a PCAM feasibility project. Our MHP contains nickel, it contains cobalt, and it also contains manganese, all 3 of the precursor metals that are required for precursor product. It makes sense that we would explore refining that product as we are the custodians of that in-ground metal resource. This is a brief timeline on the headline items that we're going to complete over the next 18 or so months. Our PFS will look to complete by the end of the year. We will leg quickly into the definitive feasibility study off the back of that. Detailed engineering, and subsequent to that, we will be running a project funding strategy. Of course, we'll be completing the current drilling programs that we have going at the moment and looking to commence drilling off our Claudes Hill resource, which is a 33 million tonne resource located only 22 kilometres from the project area in South Australia. And of course, we'll be looking at the technological investigation bodies of work, which will be value add to the project. And a little brief bit on the capital structure. We IPO'd in January. We still have 10 million cash in the bank and our market cap. Interestingly as well, we have very strong shareholder support with board and management owning over 17% of the list. And that should be it. Awesome. Thank you very much for your time, guys. Really appreciate it.